We are back at it with another video here. I know it's been roughly a month since I've recorded. Things have been busy. I've been getting certifications and everything like that. But I have a guest on today that you guys have heard from before, one of my close friends, and we want to talk about some specifics, some investments that we've done, some things that have progressed over the past month or so, and things that have gone very well, specifically with our stock today of H&R Block. And yeah, let's get right into it, Parker. What do you got? What do you got for us today?
All right, well, we did it again. We had
We did it again.
We did it again. We had another like 20% day or just under, like 18% in one day gain right after earnings. You know, they smashed it out of the water. Phenomenal earnings. Revenue was up, EBITDA, adjusted EPS, pretty much everything was up except their effective tax rate was down. So,
And was that
I mean,
that was on August 12th, right? Was earnings on August 12th?
August 11th
August
was the
11th.
earnings
Okay.
call and report. August 12th is the day it exploded.
Right.
We hit as high as 58.67.
Yep, that was the top. We're sitting right now at 52 and change.
Yeah, 52.25, and if you count aftermarket hours, 52.26, 39.
Yeah, so from what I'm looking at year to date, I mean, it's up pushing 23% year to date. The past month, this thing is up over 25%. So, I guess.
And if you guys bought in, sorry, we're doing this over over Discord this time.
A little bit different setup.
We've both been busy with work and haven't had a chance to meet up in person, so we might accidentally talk over each other a little bit. But I was gonna say, if you would have bought it when we did, you'd be up anywhere between 60 to 80%.
Yeah, I don't know if my brokerage is lying to me, but it does say 80% on mine, which is kind of crazy. I can't believe that's like truly that high. Maybe that's possible, considering where we're buying in. But it was probably like, you're right. It's probably like 60%. I feel like that's pretty
in my
safe.
HSA. I was up 80%, and then in my individual brokerage, I'm up 61.07% right now. I was up like 65, 70 when we hit 58. So
I know in our last video we kind of covered, why you picked the stock and why it sold off, but specifically in earnings this year, again, what drove it to like explode the way that it did?
Well, all the fear was mitigated, right? I mean, everybody was afraid AI is taking their lunch, but how could it be? I mean, management said themselves in the first earning call that there was absolutely nothing to worry about because they can use AI and automation to make them more efficient and make their net margins increase by allowing more taxes to be done through their professionals. And the people that are going to H&R Block want a professional. They're not your W-2 people. They're not your simple tax filers. H&R Block has made a key effort, like I said in the last video, to really overhaul their business strategy, and they want to focus on complex filers that will bring and generate long-term relationships, and that's exactly what they've been proving to do, and they've been proving to make work, or proving to make it work, or whatever, however you want to say that. So
ironically today, what we disagree on, I sold my entire position today. And I feel great about it. I feel awesome. I locked in those profits, but you're holding on a little bit more. What's your
So I'm only holding on for a few reasons. One, I sold all of the shares in my my high health savings account. Excuse me. Sold all the shares in my HSA. I sold 10 shares in my brokerage, and I'm keeping the rest, a couple hundred for covered call writing, because at the day of the earnings, the day after earnings, when the stock was up like 18%, I wrote some covered calls for a strike of $60 per share, expiring September 18th, so like a month away, for $84 in premiums per contract, so 84 cents per contract. And that was like insane money. So I was like, okay, I'll hold on to it. And honestly, I mean, the stock's worth at least 55, 60 based on earnings, especially now their new earnings. I mean, 55, 60, anywhere in there is definitely a really good range, even 65. So
Okay, so
yeah, that's why
that's
I'm keeping it. Right and covered calls plus the dividend is amazing, right? I mean, my yield on cost now after the 10% dividend raise, which by the way is the how many consecutive dividend raises has this been? 20 plus consecutive dividend raises of double digit growth.
yeah, that's crazy.
Um, yeah, they rose it by another 10% this year, on top of 12%, which is what they increased it last year. Um, it's amazing. I have a 4.44% dividend yield. I make great money on this in more than one way. Covered calls, just quarterly income, and then obviously the capital appreciation. There's no reason to dump it right now. Same reason why I still hold Altria after, I've owned it since 2024.
That's an area where we disagree, but no, that's good. And obviously, I mean, I can't argue with the returns. Again, it's stupid. I mean, this thing turned around. If I'm looking, it was at its like bottom back in March. So, um, so you're talking 4 or 5 months. This thing has completely just gone from everybody was calling, chicken with their heads cut off to now everyone's hyped about it, and problem is probably so many people now. Yeah, you'll probably be right. The fact that I probably did you a solid actually. The fact that I sold my entire position today probably means this thing jumps to like 70, 80 or something like that. Probably is what's going to happen. But you're welcome, because that's what happens when I sell. Things explode. But I feel good about it. But the reason is because I, once again, am going to reallocate into something else that
Do you want to share with us what that is?
yeah, yeah, we'll throw this in the video. I'm looking at, so if you guys have ever heard of the stock FMC, this stock has died. This used to be over $100 a share stock. I want to say it was probably up at 120 or something like that. And today it is worth a whopping $10. And we started buying into this company. All of my purchases were below 30. So I was like in the 20s is when I was buying into this. And, it had that infamous earnings call where they announced that they were going to be pulling completely out of India.
And slashing the dividend 80%.
Slashing their dividend 80%, and that's when it completely died down to under $20 a share, and then slowly down to $10 a share, and that's where we're at today. So I'm sitting at a pretty decent loss. I want to say, well, no, I probably in my total FMC position, I'm probably down like 50% on the money I've put in on FMC.
I'm down 53.9, so
I might be a little bit better than that. I'm not sure.
Yeah.
But
my average cost though was 23.44. So
okay, I think you averaged down. Yeah. My average cost might actually be a bit higher than you, because I was buying in and then I was waiting. No, it's not going to be for long, because now this is risky. But again, guys, as you guys heard from my previous videos, scared money don't make money. And I'm the guy that put in 80% of my retirement into, in healthcare. So I ain't afraid of no risk. Okay. And, I'm looking at my portfolio. I see H&R Block has exploded. I've done really well on it. And FMC is belly of the beast. Just like, I don't see how honestly it gets any lower without going to zero. It just doesn't seem like there's a lot of room at this point. Everyone's kind of day trading it up, down, up, down, up, down. So I do think I am going to slowly reallocate into it whenever we get down to that like $10 mark or sub 10. I think the lowest I saw was like $9.90 something. And go from there. And
you called me crazy for taking a bunch of money into my health savings account and buying a bunch of shares right before the earnings.
Yeah, dude, that's scary, man. Buying right before.
Hey, look at we had an almost 20% day.
Oh, yeah, you're talking about H&R Block, yeah.
No. FMC, remember after their earnings, they had a massive rally. I mean, it reversed, but they had a massive rally.
Hold on a second, let me check on that.
Yeah, their post their post 1 month. Yeah, they went from under $10 a share, like 9 something, and they spiked all the way up to 11.84.
Yep, was that July 29th or July 30th?
Yeah.
Yeah.
Yeah, they had a massive, huge.
Yep. They did explode. Then they resold off. That's what's. But then they also got They got new patent as well, which is kind of
not. Yes and no. So they have. I could go into all the reasons why. This is literally the bottom of the agrochemical industry right now. But basically, FMC had some real questions with bankruptcy and other issues, but a lot of that's now alleviated. I mean, they got a $400 million investment from Tessalondro Group, a massive multi-million-dollar deal with Corteva for a pre-order, cash up front. Debt has been pushed back with new covenants for asset protection and asset collateralization. So, I mean, bankruptcy is no longer in the question. They sold their India business. They reduced $1 billion worth of debt. And it's looking very likely that the next quarter will be the full bottom of destocking, which, if you know anything about cyclical industries, especially agrochemicals or anything in industrials, destocking is basically when suppliers or middlemen buy up all of the manufacturers, for this instance, chemicals, at one certain point in time, and then they don't need to buy anymore until they use up the ones they bought. So if they, like in 2022, when there was all the crop scares and everything because of the Russia-Ukraine war, a lot of people went crazy and bought up a lot. So then there was a prolonged period of destocking that has just continued to just be stretched out. And very likely to be coming to an end Q3 of this year. I was right about the bottom, but I was off by about 3/4. So
yeah, maybe a little early, but so you're
a little early, but I wasn't wrong, and that's
So is the expectation that Q4 is gonna finally show a turnaround, or that's gonna be the last quarter that's gonna be rough, in your opinion?
It's gonna show a turnaround, but not a turnaround like, holy crap, they're fixing everything. It's going to be a slow, sustained turnaround, but you're going to see you're probably going to see some multiple expansion because, it'll show that the worst of it's behind them. So.
Right. Interesting. Yeah. No, my H&R Block position has been freed up because that's what I'm going to be going into, I guess, next.
But yeah, I'm planning on staying with H&R Block for a while. I mean, if you just look at like everything that they talked about, they're switching to more what do you want to call it? Consulting type of business. In a way, they're going to focus on taxes, but they're going to have AI really automate the tax thing, then have the tax pros do more of the consulting of like, this is what you should probably do with these numbers here. This is what we're thinking. They're going to give you tax consulting. It's quite good. Their client gains management also highlighted record conversion improvement of 200 basis points and retention improvement of 190 basis points, saying that the business is gaining higher quality, more complex clients, just like they said was their goal. They had a very strong year. Revenue was up 4.9%, EBITDA 8.3%, and adjusted EPS was up a staggering 13.9%, due in part to share repurchases, which they actually repurchased 7% of the entire company so far this year. So, yeah. You're talking about the company that has bought back over half of its outstanding shares since 2016. The company shrank by half, technically, in size. Not in terms of actual size, but in share count, which, makes us all bigger percentage owners that are getting their stock. So very, very, very compounding effect.
And we were talking about earlier, but as of right now, UNH obviously has been seeing a pullback. I guess we can kind of just make this video into just kind of like general, what we've been doing in the market besides just H&R Block, as we covered on FMC, but also, healthcare that's been getting a pullback now, sub 390. I'm not really too worried about it. I am curious if that slide is going to go all the way to the next earnings. I have a feeling it might.
Likely.
That's what's so
But
it's so interesting. They had a good earnings report too. And
remember, this time of year, for some reason, with health insurance stocks, it's always the same. Um, Less volume in the markets in general, and then there's like you have to remember it's not just UNH. Humana is facing the same thing. CVS. It has something to do with just it's a slow part of the year for health insurance companies. Not a whole lot is going on, so people just kind of get bored with price action and they slowly sell out. I think, which is fine, but kind of dumb.
yeah,
um,
obviously the market doesn't share our same opinions, obviously, because people are.
which is fine. I mean, this thing hit 460 last earnings call, and it doesn't help that Humana has pretty much said that we're having some issues still with Medicare and Medicaid things. So that doesn't help. But at the end of the day, I don't foresee it as something that's super concerning, I guess. It's just, you got to hang out. 450 or 500 by end of year is still possible. I mean, we hit 461 on October 27th. They is when the next earnings date is, but the CFO and the board pretty much said on their earnings call that it's always been a second half of 2026 story. It's never been a first half. So the amount of gains that we've already had this year before the second half is really shown is kind of a big deal because, like I said, they always claim that the real margin recovery and the real return to growth and return to normal operations is second half 2026. So.
Right, I'm not worried about it. I'm not worried about it at all. And in fact, before we started recording this, I was considering averaging up and buying more United Healthcare because at this point, I don't know, man. 390 feels like a deal at this point. This is crazy, dude. People just don't know. People just, I guess, just disagree with this so much. It's crazy. But I mean, that's why FMC is at $10 a share. I
And that's
obviously think
why
it's worth
we
more.
buy and make the money. There's
That's
a
true.
reason why. I can't remember what your year-to-date performance is with your portfolio, but there's a reason why mine is sitting at 27.63. Well, actually, let me do the math because I had a 1.44% day today. So there's a reason why my portfolio is sitting at a 29.07% gain. So pretty much there's a reason why I'm sitting at a 30% gain in my portfolio year to date.
Yeah, mine's like 19, but that's because the past month United Healthcare has been sliding because I'm so heavily allocated, man. It's crazy.
Oh.
I went all in.
And some more H&R Block fun facts on a trailing 12-month time frame here. Their revenue's up 3%, operating income's up 7%, but this is where stuff starts to get juicy. Net income's up 21%, earnings per share 19%, operating cash flow is up 38%, free cash flow is up 45%. That is
Really good.
huge. It's amazing. It truly is.
Sounds like music to my ears. What would you say is kind of like the standard in each of those categories?
What do you mean?
Like, how people generally say like EPS, like you want to aim for, I forgot what the number is. I want to say like 15 to 20.
Well, that depends on your share count. EPS only depends on share count. Less shares, more EPS. So that's aiming for that is highly subjective to the company. But if you're talking about like different relative valuations and if you're talking about different profitability metrics, then yeah, like for example, debt to equity, you don't want more than like 0.5 or whatever it is. And if there is more than 0.5, there has to be special reasons and everything like that. It's highly subjective to how you want to look at it based on industry. Or you can, H&R Block is negative debt to equity because their shareholders' equity is negative, and that's only because they bought back so many shares. It's just a weird counting quirk, I guess you could call it. if you do want to compare one thing, you can compare their net income or their net margin to everybody in their industry. They're in the 86%, 86 percentile, which means they're very, very, very high, and they're above average for their industry when it comes to net income or net margin. Their net margin's 18.7% currently. It's improved by 3.8% versus a 3-year average of 14.9.
Hell yeah. And just kind of jumping around here, I didn't realize this, but, FMC cut their dividend, but is it still over 3%?
Yes.
That's not bad. It was
No.
pushing 6% to 7% at one point.
Yeah, 3% is still fine. That's not.
Yeah, no, I'm definitely reallocating into that. We'll see if I pay for it or not. We'll see.
I don't think you will. But
I don't think so either.
Even as an entire country basis, they're in the 82nd percentile, which means they are doing far better than everybody else in the United States.
Talking about H&R Block or FMC here?
Yeah, H&R Block.
Yeah.
FMC's net margin.
FMC is not
30%.
They have a negative 22 EPS. Isn't that fantastic?
Yeah, that has a lot to do. That has a lot to do with goodwill impairments and write-offs on different purchases, like India operations.
Things they're trying to do to turn it around.
Yeah, that's just expected, but yeah, it's higher. H&R Block has a better net margin than 82% of other companies in the United States. And this is based on 15,072 companies with incomes or net margins.
I'm trying to think, is there anything else we've been doing recently? Obviously, I invested in both Comcast and General Mills, and I've kind of just stayed stable in those. You're starting to see General Mills turn around. It's almost at $40, so I think General Mills is starting.
Better not go to 42.50. I can tell you that much, at least until after September 18th.
Yeah, it's slowly climbing. I think General Mills will be a slow climb. That's going to be slow.
I have a covered I don't know, it's up 5% today. I have a covered call
for
42.50 and 45. And I really don't want to be assigned because I like having this. So yeah. So let's hope it stays lower. Hey Garrett, you should probably sell buy more so it goes down.
No. General Mills is at $40. Wow, it was up 5% today. I wasn't even paying attention. Damn.
I'm not excited about this at all because we are a month away from September and there's only $2.50 of wiggle room for me not to be assigned on these shares.
Yeah, I hate to break it to you, man, but I think it's going to hit it. Because it seems General Mills, and this is why so far I obviously have been wrong. I like General Mills overall better than H&R Block because this feels like now that it's going up, this just feels like a stable, like it's not going to like explode, but this is just going to be a stable up going forward. I think it's just going to slowly just go, and just slowly climb. And I don't think you're going to see much like pull black besides like the normal choppiness. And yeah, I think your call is definitely getting assigned. And I think that means you make the money, but then you lose the position.
Yeah, I mean, not all my position. I have 200 shares, so I'm going to lose 100 shares. I have 2 covered calls written, one for 42.50, one for 45. So,
dude, what if you lose both?
If I lose both, that's great.
You said that was such like, that's great.
I'll make a few $1,000s. That's okay. You know.
Yeah, I'm high on General
I'll be in the
Mills.
double-digit percentage returns. That will be good. I mean, it'll suck because I won't get the 7% yield on cost dividend, but whatever. I mean,
yeah, that's nice. That is nice for sure. I like General Mills.
The real problem I'm going to run into is I'm going to have tens of thousands of dollars just sitting around if I get assigned an H&R Block and I get assigned on General Mills. I'm going to be sitting on so much cash and nothing to invest in.
Hey. No, you will have something to invest in. You'll have
yeah, that's right. FMC.
Hey,
Yeah, I'll
are you
definitely
gonna
put some in.
you're gonna have the conviction like I am. This is the new UNH. You're not missing out on this. We are going all in. But yeah, General
Comcast.
Mills, Comcast, anything
We didn't
big.
talk about Comcast much. I actually bought my covered callback from for Comcast.
Oh yeah, anything big on
Yeah.
that side?
Other than the fact that it like completely reversed from 21 to like almost 28 is insane. That's why I bought it back. There's a good chance it hits 28 by Friday, and that's why I'm like I'm gonna take the profit on my covered call and just buy it to close it.
I need to pay more attention,
I made a
man. Comcast is
30%
up.
return on my covered calls in the week.
Yeah, it's in the past month. Comcast is up, pushing 12%.
Yeah, no, it's good. I mean, since their earnings, which was not bad at all, if we're gonna talk about some crazy sell-off, they sold off hard on their earnings when their net income increased, net margins increased, free cash flow increased, debt went down by $1 billion, and the stock sold off.
Yeah, the markets, as you know, are not always rational. It gets to that point where I think they're looking for, like, they go into earnings expecting, like, like some golden report that's just like insane. And then
They
if
weren't
it's just
expecting
like
a golden
good,
report for Comcast, though. Comcast was having issues with broadband customers, and their broadband customer loss was still greater than what I think the market wanted to see, but it's not as bad as it had been. And they're showing that they have options to make up for those lost customers, right? They're increasingly getting more revenue from their current customers. They're having profitability with Peacock. They're having better efficiency gains. You know, there's different ways that they're able to still increase that free cash flow and easily cover the dividend. It's a 32% payout ratio. They could hike the dividend by like 20% and still be under 50. Like it's good. Um yeah, that's one of those weird ones where when it was trading below book value, I just unloaded my wallet into it.
yeah, no, and it was definitely another good pick. You got to get it at the right time for sure, because that's one of those that's been selling off for like 5 years or something. It was, yeah, since 2021. They hit their peak in 2021. So that is, if you're someone who bought at $57 a share, dude, what a bag hold, man. Who held on to that?
Well, somebody had to have bought General Mills at 90 a share when it was trading at 90 back in the early 2023s.
Yeah, yeah. There's some. If they held it for this long, that's impressive. There are definitely some potential insane bag holders out there, for sure. But in terms of what we're doing for investing, I think that kind of wraps up, right, what we've been doing. I can't think of anything else. Those have kind of been our picks, our results so far.
Well, we have Amdocs, but that's more of mine.
Yeah, that's something that you've
I never
talked
talked
about.
much to you about it, or at least I've never talked much outwardly about. I don't own a lot of shares of this. This is like a really small position. I want to say, actually, I can tell you how small of a position it is. uh, Out of all of my equities, Amdocs makes up 3% of my portfolio, where Comcast makes up 13, General Mills makes up 13, H&R Block makes up 17, and United Health makes up 31% of my portfolio.
Yeah.
So, Amdocs being a 3% position is quite what do you want to call it? Quite low. Quite small. The only smaller position I have is Altria, and that's not because of it being a small position in terms of me being like, oh, I can't really afford to buy much more or anything, or I don't trust this play. This is literally when I bought this stock back when I didn't have a lot of money right out of college. So the amount of money I did put into it, a measly 26 shares, felt like a lot of money back then, and it, yeah,
Yeah,
not as
don't
much money today.
yeah, and don't get the impression, guys, that, we've been able to buy all these things so quickly overnight. That's not how things go. Obviously, you've been investing for a long time.
Blocks of shares. Like,
yeah,
we weren't buying off the rip like 300 shares of Comcast or 200 shares of General Mills or 250, 300 shares of H&R Block.
No, my investment journey started 6 years ago. What year did you start investing?
Seriously investing or
anything?
Messing around investing? Because if you're talking messing around investing, let me think. 8 years ago? Yeah, 7 or 8 years ago.
And when did you really lock into, the strat and really take it?
4 years ago.
4 years ago. Yeah.
And I refined it 2 years ago.
I'm curious, as of right now, obviously we're going off the latest data. As of right now, what is your average yearly percentage return? I feel like this year's been your best year so far, right? How could it not?
Yeah, most likely. Here, let me do the math quick. 28.25.
Dude, I'm good, bro. Look at me. I'm
roughly.
Good. Yeah. 28.25 average yearly return off of 4 years is insane. I mean,
well, 2 years, because I refined my strategy 2 years ago. I started applying my strategy it took 2 years to kind of figure out what worked and didn't work.
Okay, well, I'll still go with the larger sample size, but that's still insane. 28%, because I mean, like, your S&P is like 10 to 12. The NASDAQ year to date is like over 13 so far this year, which is pretty good. But it's kind of been unprecedented.
Data mine says 11, so I don't.
Really? Google might be lying to me.
It might be. I was going to say it might be including today's gain, but it was only 0.16 on the NASDAQ 11.
Well, yeah. We don't think that'll continue.
2% margin of error, not a big deal.
Not bad. No, but we don't think that'll continue. This year's kind of been a crazy year for technology, and
it's been interesting. What? You know what? It's been interesting, but you know what? My purple line, which is my brokerage account, lined up against everything else, is significantly higher than S&P, NASDAQ, and Dow all year, aside from the very beginning of February. Aside from that, yeah.
Right. Yeah. So no, I like our picks. You guys kind of got an insight into how we think, and the picks, especially with this man here, Fines, the man, the myth, the legend, obviously. Because a lot of these start with you. These picks start with you, and then I start looking at these stocks, and then I get us hyped up on one, and then I put in 80% of my retirement into something. That's typically how it goes, and I have a fear and excitement that FMC is going to become the next thing. So
this guy, bro.
This guy, bro. That's gonna be
this guy.
You need to give me a shirt that literally says that. This guy, bro.
Right after, I mean, this was, what was it, 2025? So, like, yeah, I was a year out of college. Still didn't have a ton of money yet, I was building things. I didn't have a lot of sitting around cash. We'll put it that way. I had a lot of stuff invested in a ton of different places, mainly the family business and whatnot. And so I was running super low liquidity. I think 90% invested or more, and then like 10% liquid. So very little. I was buying so much United Health because of this guy. We would talk every morning about United Health. We would read the Reddit posts and be like, oh, look at what these guys are saying. Oh my gosh, this guy sold at the bottom, and he bought at 600 and he sold at 250 or whatever.
Dude, everything.
And then he'd call and be like, I'm buying more. Are you buying more? I'm like, shit, yeah, okay, I'll go buy more, but I didn't have enough money in the bank, so I had to go put money in the bank.
And you were actually running to go put cash into the bank so that you could go and buy more UNA.
Yeah.
Dude, that's so based. That's where we're at, guys. It was like a race to whoever could allocate more percentage of their brokerage into the stock.
It would be down 2%. It would be down like 2%. in a day, and it'd be like, oh, we're buying more, and it wouldn't be buying like all of the shares at once. It'd be like buy like 2 shares at the beginning of the day, 2 shares at noon, and then like 2 shares right before market close because they kept going down. And be like, I gotta buy more. Oh, it's down below 270. Better buy more.
Kept averaging
And
down.
like, I have a margin account, and let me be completely and perfectly clear. I was never using margin, but I was moving money so fast into my brokerage account and spending it and buying the stock right away so fast that the funds were not settling in time. So I was actually getting margin interest applied because I was technically using borrowed money because my money was not settling fast enough in my account.
There was like once or twice I think Vanguard warned me about that because it was flagging me and was like, yo, like the money ain't here yet. Like, and I'm like, I don't care. So that would have like a negative balance or something like that. I've definitely pushed the lines for sure, just because, dude, how could you not after all that? How could you not? And look, it worked out. And at the end of the day, we wish we took out margin at this point. But
yeah, dude, if I would have took out all the
I should have taken out a loan against my house.
$4 in margin interest.
Wow. Oh yeah. Dude, great times. This past year has been fantastic. And I mean, it's August, so yeah, it's been just over a year since I kind of joined you on this. And dude, it's been like, dude, investing in single stocks is one hell of a ride, man. It absolutely is. And you guys kind of get an insight into the thoughts and everything like that. There were definitely, some sleepless nights that I had with UNH when it was down low and I was down thousands in the hole, but we get through it, one way or another. You got to make a phone call to, the boss here, and you just got to be like, yo, dude, I don't know if I can do this. And he's got to tell you, listen, dude, you got to hang on, you got to hang on. So
I had to bully you a little bit.
Yeah. Like, don't sell. And like, no, that was never a threat. But I was thinking, you can't help those thoughts.
I don't know. I mean, I didn't have too many of those, but
no, I just remember
telling my girlfriend bye for work a few times and being like, oh, damn, I'm down another $500 today or $1,000 today. Oh, well.
Yeah, no, it sucked for sure, but you were always pretty convicted. You didn't waver too much. It was more, when you were depressed, it was less about like, damn, dude, I might lose it all, or damn, I might sell. You were more just like, damn, it just sucks being down $500 today. Why can't I be up $500 today?
And I can't buy anymore because I don't have any more cash right now.
Yeah, exactly. But hey, that's the mentality you need to have to be successful in single stocks. And it even challenges me, man. It takes a special person. And I think a lot of people, I mean, if you ever read on like Yahoo Finance, you'll see plenty of people that probably shouldn't be in single stocks because they're just,
or even Reddit.
Reddit too. Yeah. Reddit's full of people think that like, S&DK is value. Like, it's like, dude, this is great value. And it's like, bro.
Or Micron.
Yeah, and then it's when it like dies that people like panic and sell. But then at the same time, I kind of get the fear because they invest in something so high that gets to be so volatile. And when it's down like 20% in a week, and they're like, shit,
or like S&DK down 50% a month.
Yeah, because to be true with you, like when it comes to something like S&DK, a part of me doesn't blame them because who knows where that floor is, dude? Like, you don't know. So you're just like, damn, like you panic and you sell because that floor might literally be down 80%.
Or like the guy that we read on Reddit when he's like, yeah, I took my wife's and I's life savings and I put like almost all the United Health at 600, and he's like, I don't know what to do. It's down to like 270. I think I might just have to sell it all because I can't take it anymore. And then like everybody like dogged on him in the Reddit comment section. It's like,
yeah, you can't.
Why would you even say anything?
You can't do that. I mean, even if you held till now, you got so much money back already. And just, I mean, it's eventually going to get back to all-time highs. We know it. UNH will.
Yeah, it's not a scary thing at all. I mean,
absolutely not. UNH is like, the only thing that did kind of scare me was the whole lawsuits thing, but that kind of comes with the territory. So, and it sounds like the fact that it's not in the news anymore makes me feel like under wraps this thing is getting.
The court-appointed special master took and recommended that, like,
yeah, he was like nothing.
They're like, he literally recommended to the federal government to drop the case because he's like, there's literally nothing here. I don't know why you're pushing this so hard.
Yeah, probably just more of a PR thing, I guess you'd say. I don't know. It definitely looks good because people don't like health insurance companies, and I'm not the biggest fan either. I'm not saying they're saints or anything like that, um, but no, they're constantly getting audited. The government's constantly in their books checking them. I want to say it's multiple times a year, so I just feel like they would have been caught by something if it was as big as they say. And ironically, everything that's occurred with the company, I think, is they're in order to become more profitable, they're doing the things that people don't want. They're covering less. They're not covering more expensive clients and things like that, obviously. And so, yeah, that's something that's occurring now, whether you like it or not. So, and the government is also trying to subsidize less when it comes to Medicare, Medicaid, those kind of things. So, just the way of the game, honestly. But overall, I feel good about our positions, what we've been doing over the past year. Again, this is kind of, I'm going to serve this as kind of like an update video. We've kind of hit, we're actually going on 45 minutes here. Pretty good. Kind of like a mini podcast. I like it. It works well. It's been a month since I've recorded. So good financial update about where our headspace is at. Is there any final parting thoughts or anything you want to throw in?
Make sure you put all your money in SNDK at the top.
Yes. Buy SanDisk at the very top and wait until the crash to sell is our final bit of advice. And what is it called? It's called buy the peak, sell the dip. That's how it goes. Yes. Buy the peak, sell the dip. And I'm thinking about a Warren Buffett meme that you would send me. I'm thinking about that envisioned in my head right now that I will not repeat.